All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, December 22nd, 2022. If you've not done so already, give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, what a day for the markets. I did not, I made the thumbnail for today and the title at about 2 o'clock. and so there's obviously been some movement here, to say the least, before the close. So if you're just catching up here, GDP numbers came in pretty hot. It was revised from last month. This does not include the SPR release, though, so there is a little bit of lagging or perhaps like a misleading print there. Maybe that's what got the market to squeeze up here. But regardless, I did kind of mention some suspicions of this sell-off earlier today. And look, for one reason here, let's just say, so GDP is hot, right? So the 2-year should be getting crushed, right? Well, the 2-year was down 11 basis points today, but I mean, we still have a bullish inside bar here on the daily. Nothing really terrible going on. The 30-year as well. You can see where it's trading currently. This is where it was before it sold off, and this is where it was really all day. So the bonds kind of calling the bluff here on the GDP data, saying like, well, this isn't really that big of a deal, but the market was selling off anyway. Then you have David Tepper going on TV, and he basically said, you know, the economy is going to crash, earnings are going to be destroyed, this, that, and the other. Basically the most bearish take of all time. I don't know about you guys, but it sounds to me like this was a load of BS, and someone got trapped right here on the November CPI number, and they didn't have any risk management skills, and they didn't cover. And somebody, maybe David Tepper, maybe Citadel, somebody bailed them out with this move. The volume was not very heavy on the spiders. A lot of it looked very driven by the futures, as well as zero DTEs. With the old video I did over the weekend about that, there was lots of zero DTEs puts being bought today that were pushing the market lower. And again, we have bonds kind of questioning the move. To me, it just felt like very suspect. I knew that they would defend the VIX at 20. I did not think it was going to really pump this much. Obviously, it was up almost 20% at one point. By the way, one thing to note here with the VIX, take a look here. So falling wedge, we broke out, and then we retraced the lows. We had a nice bid here, and it's very similar to what we're seeing here and in August. Although in August, when we had the retrace, we kind of flagged here. I think we'll see something more like this before the next leg down. But as far as today is concerned, this really stinks to the high heavens, if you ask me. Look at that daily candle on the spiders. That's not fundamentals. Macro has nothing to do. This is just pure mechanics manipulation, if you want to call it. But yeah, they basically filled the gap there on the spiders, and we got a massive epic squeeze at the end of the day here. And we're kind of warning about that, especially with Tesla here. Tesla was really driving the market lower. Lots of talk of margin calling, down 8% here, almost 9% on the day, finishing there. Take a look at the volume here. So 204 million shares traded on Tesla. I think that's the most. Yeah, that's the most volume since March 2021 there, with that big fake print, those big fake prints down there. This looks like some capitulation here. We do have a falling wedge on Tesla, and it's through that gap from right before where it was added to the S&P right down there in 2020. Once this sell side liquidity is exhausted, there'll be nothing left but buyers. And I think Tesla, could easily be up 10, 15% a couple days in a row. So I'm still maintaining that. By the way, I do still own Tesla, just so you guys know. Full disclosure there. But this whole sell-off just stinks to me. And I'm a bear. So if you guys are not with me with members, I'm not just some sour bull. Like, we're not like FOMO longed or anything, or mad because we bought up here. We didn't buy up here. We were short. We still have shorts. We're nibbling at a few longs right here for a possible bounce, just so you guys are aware. But it's not like I'm, permabull or anything, or complaining because I lost money. And this has nothing to do with that. I made it very clear I'm pretty neutral this week. But this whole sell-off was just it just stunk here. I mean, you're going to tell me that we sold off on GDP, a revised GDP number. I mean, that's just pure nonsense. And you can see the market squeezing heavily off the lows here tomorrow in the afternoon. Tomorrow, it's interesting. We do have a fake print, Kevin. You're right. 386.21. So there's the SPY right there. You see the daily. And on the intraday, you can see here the high of the day was 383.38. So maybe they're telling us that we come up here and 386.29. That's the gap from yesterday, right? So maybe they close us up there tomorrow. Maybe that's where we're going to go. Certainly can't rule it out in this market. And I know a lot of shorts got absolutely trapped hard down at the lows here. And I even said to members in our forum today, I said, yeah, well, we filled the gap here on the triple Qs, by the way. But I said, if we get this 260 on the Qs today, I mean, I have to take a stab at that on the long side. This is just an amazing sell-off here. NASDAQ was down over 4% at one point, finishing down 2.45. But what a bounce here off the lows. You see the diamond here via the Dow, testing that trend line again. Got a nice little bid off of that. Came off the lows there. IWM, same kind of deal there. And I said, to you guys earlier this week, multiple times, I was like, I would feel a lot better about this market bottoming if we could gap down. And that's why I never really liked that rally yesterday. Yeah, we closed it above the 50 moving average on the SPX, but I wanted to see a gap down and then a rally up. We might have enough bears on board to get a rally though going after today. At least enough bag holders bagged essentially. But what a move off the lows. This market is, if nothing else, exciting. We'll see what we do by the end of the year. And tomorrow's close will tell us a lot more for sure. It really is going to be important here, specifically on the transport. So I want to take a look at DJT first. So again, showing some weakness here with the lower lows. But we got to watch this level, and I've got it marked in right now. So 13,475 is the weekly green bar low. We're currently below that. If they can save that, that would give the market a positive bias, I think, going into the end of the year and into January, at least for the near term. I'm not expecting anything to, I still expect everything to go lower regardless. But for the near term, if they save that level tomorrow, that would be a positive. Another thing that was probably helping out a bounce, the cases of a bounce here, was the semis. So they were very, and I mean very weak earlier today, leading to the downside, in fact. But if you just take a fib to the lows to the highs, you can see we went right into that 50% fib. I told you guys 200 was probably where it was going to want to go on the downside, and we got a nice bid off of that NVIDIA, which I did play for a little day trade at 150. That got a nice bounce at the 50 and 100 moving average, that little necktie area right there. This thing just got crushed. I mean, look at this. Just no bid, and then you finally kind of put in a bottom, then we got to squeeze up with everything else by the end of the day. But semiconductors coming off the lows, Micron getting hit off earnings. Nice little double bottom defense though. I did finish with the tail candle on high volume, so there's a chance it could rally back up maybe to that 50, 55 handle there on MU. Maybe has a little bit of resistance at 52.50, but either way, Micron coming off the lows a little bit there. But yeah, semiconductors did help out. Just hitting that support level at 200. I knew that was going to be a good level for the market. IGV actually held up pretty well here for cloud software. So down just 1.92%. And it actually finished, looks like, yeah, it finished really inside of yesterday's range, believe it or not, by a few pennies. So nice little rally there for IGV. This is still kind of a weak chart altogether, but it's hanging in there for now. I wouldn't currently do anything with it at the moment, but yeah, we'll look at it next year when things kind of shape out. All right, so we talked about the transports. I just want to get through everything, then we'll get to the questions and everything. Yeah, transport. Okay, let's look at interest rates. We mentioned that a little bit earlier. 10-year still holding up. But again, it wasn't like, 10-year is actually red today. So, and it was red all day long, and that's with the supposed hot print of GDP. So when I see something like that, I have to question what's going on. So that's your first red flag on the sell-off right there. Then we see the 30-year. Again, that was also red too, but it's still kind of flagging here or on a daily basis. So, it could get another push up here, and I still have that buy signal working right now. We'll see what it does tomorrow. We mentioned the 2-year already. You still have a bullish inside bar on the 2-year bond, so this can still get up to that inverse head and shoulder target, and it's hanging in there okay. So we'll just leave it at that for now. Let's look at HYG. Yeah, HYG still has higher lows, so I mean nothing terrible right now. JNK that broke. Oh, that okay. So JNK getting interesting. So that little bear wedge we were talking about, that looks like it could be breaking down there. So we'll keep JNK on the radar as well. A little bit of weakness there. Definitely got to watch that going into January. All right, home builders XHB basically holding that 50 moving average. Nothing terrible here. It's still above this green bar low, so it's still safe. For now, ITB, same thing. This is holding up much better. And then VNQ really losing this whole pattern. So as soon as you fail, as soon as you get a failed pattern here, you can see the weakness in it. It back tested that level yesterday, gap down today. It did come off the lows, but again, lots of weakness here with VNQ. So I would be careful with that. XLF, again, pretty good gap down here. We saw a lot of weakness in the banks. JPM earlier, Goldman. Let's look at BRK. Yeah, Berkshire coming up, getting a pretty good sell-off. Actually, that closed above that neckline yesterday. I didn't catch that. So that is actually a failed pattern there on Berkshire, just for what that's worth. At least the head and shoulder anyway. Doesn't mean it can't go lower, but just be aware of that. Either way, but XLF weaker, did come off the lows like everything else. It rallied back to close back above the 100 moving average. This is still starting to put in potentially a bear pattern here, though. So be careful. So if this keeps going sideways, could tell you that it wants to go lower. Let's look at KRE. Yeah, not a great, I mean, you're basically into double bottom, and this is the best defense you got here on KRE. So be careful with these. I do think these are shorts going into 2023. Not quite yet. Let's not get ahead of ourselves, but definitely weakness in the banking sector. Still broker dealers. Same thing here, closing below the 100 moving average. Crude. Basically a flat day, tried to break out, but it did come back in off the highs, and it's basically flat here, and then got a nice bounce off the lows there. If this, again, like I said yesterday, if this forms a bullish pattern, it could move higher. I'm just not entirely convinced of it currently. XLE also red with everything else. This is starting to look like bearish chop here, so be careful with that. Same thing with XOP and OIH, although OIH is holding up much better than the other two. Nat gas, this is really close here. This is into, I would say, a buy zone. If you want to nibble at it here, I wouldn't have a problem with it. The only issue I have is that we came down here, we got close, we bounced, now we have a lower high. So it could hold up at $5, but I would probably look a little bit lower than $5 here. If we can pierce this tomorrow, it could be a buy here on nat gas. If somebody wants it, you guys want to play with it right now and nibble at it, I don't have a problem with it, but just be aware that it can pierce this level here, especially with the velocity. And I mean, you had a basically, this is, you can make a case this is a failed bullish pattern here. So just be aware of that with nat gas. Dollar index showed some strength today, although, I mean, if you look at the daily, this looks like it's not even doing anything. I still think this can roll over to that 102 handle, at which point I think it'll probably be a buy. But for right now, it's hanging in there, and it did put pressure on stocks for once. It seems like lately that kind of correlation has kind of gone away here because the market's more worried about recession now than it is about yields going up. But with the yield kind of scare today, not even yields, but just the GDP number scare, you saw dollar put pressure on stocks today. Either way, I still think it has to go lower regardless. Gold down today with the strong dollar makes sense there. This can still get to 1875, but I don't think it gets through that, at least not right now. So that's kind of my case there. Silver also backing off, but still has an uptrend. This still needs to do a lot more backing and filling. I will like it soon, but we'll be patient with it, and I'll let it give us a setup. Platinum also definitely on the softer side. It's going to need to hold this trend line here. If you close a weekly close below that, it's going to go back to 950. Either way, 950 is pretty good support there. That's where you broke out from. So platinum could get a bit off that. Again, ultimately, this goes back to the highs regardless. So, is what it is there. And then copper, a little bit on the weaker side here today, down 1.22%. And again, another thing too, if the GDP number is revised so hot, then why is copper red? There's another thing to add to it. So just some things to look at. Bitcoin today, basically just kind of flattish here. Let's look at the futures. You got a nice bid off the lows with everything else here, but it was never down that much here. It's basically just still in that holding range and still inside of that weekly bear pattern. Anyways, all right, let's get to questions here. Yeah, I mean, it's that's the question. I think we probably, I don't know what we get for tomorrow. I mean, I would think that the bulls have a lot of momentum right now because they just bagged a lot of shorts. So, I mean, we could get follow through tomorrow, maybe even a gap down, a dip for buying. I don't know. It's definitely interesting to see that 386.21 print, um, right to gap fill, by the way. And it just, this whole thing just seems so suspect. Like, there's no way that we should have been down that much. And I don't know if you guys saw it, but on Twitter earlier, I posted a picture of the Jackson Hole this day right here, the spiders intraday. And even that day, we had to bear flag at like 11 a.m. Today, we didn't even bear flag. We just went down, 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 down. And then we V-shaped. But today was one of the worst, probably one of the worst sell-offs of the whole year that I can remember, at least up until about 2 o'clock. It felt very contrived to me. And obviously, you can see now with that big move off the lows that was probably well founded. But yeah, I would think you got to think bulls have some momentum here going into tomorrow. I mean, yes, we were still negative, but that's a pretty big bounce off the lows, and there's got to be a lot of shorts trapped in here. So, big picture, bears are still in control, but maybe into tomorrow, I think we could get a continued bounce. Let's look at the weekly here. Yeah, so basically they're defending that green bar low, which was where the CPI gap was on the weekly. We'll see what we get tomorrow. It's going to be interesting, especially we've got to watch those transports there, like I said earlier. Yeah, I was, I did pick up something this morning, you guys know, but Miranda, but, I was very close to picking up QLD. Like I said, at that triple Q level, I mean, it was getting so oversold here. But at the same time, this is a bear market. You got to respect it. And I'm not trying to go, get crazy and go on like too much of a buying spree here. And I mean, this is a market that is very volatile right now. A lot of the price action today was 0 DTE driven. And I mean, we've had these 2%, 4%, 5% up days, down days in the market. So it's very easy to get clipped here. We do have, we nibbling at a few things here, but you don't want to go overboard in this environment. Cause I mean, like I said, with the VIX here, that curling pattern is pretty, it's pretty valid. And I think we can definitely, I didn't see this sell-off coming, to be completely honest. I told you guys yesterday I didn't like the price action for a sustained rally, and you're seeing why here. So this is a touchy environment, so I don't want to go too crazy here on either side, but that's why the book is kind of neutral here. We have some shorts still from the highs, and we're trying to nibble at a few longs for a bounce, but you don't want to get too carried away in this environment. By the way, you could also make a case. Again, this is early. We're not going to entertain it too much yet, but if we bounce here, you could put in a head and shoulder. So be aware of that going into the end of the year, into the middle of January. So watch that there on the spiders. But that would be a pretty valid pattern if we came back over and rolled over. So something to look at. Yeah, I'm long Tesla too. I think dollar cost averaging down here is an incredibly high risk reward situation. I love that Tesla is the poster child for it's just getting dragged through the mud. Everyone's dunking on Elon. Everyone's dunking on Tesla bulls. And I'm not a Tesla bull. You guys know that very much so. I think it has to go a lot lower. I think I told you guys a week ago, it's got to go to 110 eventually. But right now, this is absurdly skewed risk reward to the upside. I don't know if you guys caught that spot gamma video that I tweeted out. Go check it out on my Twitter. It's only 3 minutes long. But basically, the January expiry is loaded with people expecting a crash in Tesla. And it's not likely that that happens at this point, especially with basically the worst is priced in right now. So I think Tesla will be up 10%, 15% in a day, probably for a couple of days here very shortly. If not by the end of the year, then in January, once the tax law selling is out of the way, this thing will rip as well will a lot of other things. Yeah, I mean, obviously Micron did drag it down in the morning, but I mean, anytime the semis are leading to the downside, that's usually never a good indicator. But they did come nicely off the lows. That was a really good level there at 200, right there in that 50% fib. It was also, right where this kind of gap is, even though you had a bigger gap down here, but pivot high, that was a good level right there for the SMH 200 whole round number. You had to figure that was going to get defended there. Matt asking if I think 2023 will be volatile. Yes. Yes. It will be a trader's market just like 2022. Absolutely. I think buy and hold is going to be, um, I don't want to say dead, but it's not going to work for quite a while, at least through next year, I would say. Bitcoin's not. See, Bitcoin was more just like a kind of controlled demolition. If you look at where it topped out here, you've had big downdrafts. Let me go to a daily. You've had some big downdrafts, but it's been pretty orderly. So down, bear flag, down, bear flag, down, bear flag, down, bigger bear flag, right? Down, bear flag, down, bear flag, down, bear flag. What do we have now? Down, bear flag. So Bitcoin, it's kind of lost, I would say, around sometime around June when it really capitulated here, when we had that big dump. That's when it kind of lost correlation to the NASDAQ. The NASDAQ and Bitcoin were pretty positively correlated most of the year, but right around the middle of the year, maybe even into the summer, that correlation really kind of broke down. So Bitcoin's kind of just trading on its own time, but it's a controlled demolition. So, it'll be down, it'll be sideways for a while, then all of a sudden it's just going to go down again. And again, it's still looking for the low, 10 to 12,000, somewhere in that area. And the longer this consolidates, the lower that number gets, just so you know. But yeah, Bitcoin's kind of decoupled a little bit from the equity markets. Yeah, I like Natty here too. I don't have a problem if somebody wants to nibble at it. That this trend line's really good, and it's been really good all year. Or actually for more than a year, back to 2020. The one thing I'll caution against with Natty is that we've come down, and now we put in a high, then we put in a high. Now we have lower highs, and it's been kind of like, so if we go back to this chart here, so you hit it, and then what, like 5 months later you hit it, then like 6 months later you hit it, then like 9 months later you hit it. Now we only have about a month or two in between this hit and this hit. So you could make a case that momentum's declining. So I would just be careful with Natty here. That's why I want it to really pierce this trend line. But if it makes a lower low, I would be very concerned with nat gas. Even if it gets a bit off of that, I would be concerned with it moving forward. And by the way, I don't think I talked about this publicly, but you could also make a case that you have an MA pattern here. So here's your big M, double top, and there's your A. And if you're not familiar with that pattern, we'll just go back to what we were just talking about on Bitcoin. And there it is. So big double top, slight pierce of double top, and then a down move, lower high, and a big sell off. So just be careful with it. I still think fundamentally it's really, the nat gas is set up very well, but I can be wrong. And who knows, maybe the economy gets so bad that it just doesn't matter. So just be careful with Natty here. But yeah, for short term, I like it if we pierce that $5 handle tomorrow, this trend line specifically, maybe like 485, somewhere in that area. But if it makes a lower low, I'd be careful with it. Yeah, I mean Tesla paid on the put side today, John, for sure. I would just caution against puts because implied vol or at least take some profits here because implied volatility on Tesla is ridiculously high. And if this gets any sort of bid, I mean this could I would not be surprised to see this at 180 within a few weeks. So, I mean the trade is incredibly crowded on the short side. Just be careful with that. Yeah, and Jerry, we're about to have a where I live, we're going to be in the it looks like there might be even an ice storm because we're going to get freezing rain overnight, and then we're going to get that stupid polar vortex tomorrow into Christmas. So we'll see how that goes. Might lose power for Christmas. So hopefully that's not the case. Um, really, hopefully. But yeah, it definitely hitting the nation right now. So Chip asking what's my overall outlook for 2023. I'm gonna do a whole video on that. Actually, have it kind of partially drawn up, but I'll do a whole video on that. Maybe I'll probably do it this weekend, honestly. But yeah, a lot more volatility though, for sure. Risk reward for the ups. I would just go. It's tough. I would probably go with triple Qs only because we're into the tax loss selling. Um, I would generally say to be safer, I would go with SPY, but because of the January effect, you could probably get a sizable rally on the triple Qs. I don't expect it to be like this rally that's coming. It's not going to be like the August one. It's not even going to be like this one in October or November. I don't expect it to be too huge, but there will be a few individual names that do really well. So just want to be clear on that. Well, either one of those days, Chip. I don't know. I don't remember which one, but one of those had to bear flag. I believe it. I believe the it might have been this is the day I was thinking of, not this one. Just to be specific, that doesn't really matter. But yeah, it was just straight down for like 4 hours, 4.5 hours really today. Let's look at yeah, let's look at Sprott. Yeah, see, I'm still not in love with uranium right here. There's CCJ as well, URNM. I would wait for these to go lower. So you have, I'm just going to use URNM because it's got more history. But you can see, is that a fake print? Yeah, it looks like there's a pretty good fake print on URNM here. Or did they do a split? Did this split? I don't know. Let's look at URA. So either way, you have a down move and an inside pattern here. And you can see it on CCJ as well. Big red inside bar and another one right there. I don't like uranium right here. I would wait for like 16 or 18 on CCJ. For SRUUF, it's hard to say because it doesn't have as much history. But I don't know, probably 8.8850. It's hard to say where that low would be. But no, I'm not a huge fan of uranium right now at these current prices. Yeah, the bounce on the Qs was weak though, but here's the thing. In a week, all the tax loss selling is going to be out of the window, and those names will have nothing left but buyers. So that's why I say the Qs could have some more upside. Oh, I don't think we're going to have new highs anytime soon. Lee asking if I think the markets use PCE tomorrow as a reason to squeeze. Absolutely. Absolutely. It's definitely a reason they could use. Like just like yesterday, they gapped it up, got everybody on board ahead of GDP, then they dumped it down. Then intraday, they got everybody on board on the short side. Then they rallied up. Then PCE, maybe, So I can definitely see that happening. Yeah, NVIDIA still has that gap, but NVIDIA, I mean, you got to look at the level here, though. And that just shows you that it has relative strength here. That broke through that channel, though. That's a pretty strong break either way, but they should hold up here at the 50 and 100 moving average, at least for now. But yeah, NVIDIA did not fill the gap. But it's still a stronger name. I mean, look at the chart of NVIDIA versus Intel, which is almost at double bottom, Micron, which hit double bottom, AMD, which is much weaker. AMD didn't quite fill the gap, though. But NVIDIA is still the strongest horse in this race right now. Although, I mean, TSM probably. Yeah, TSM's a little better. KLA10 core is holding up pretty well. Nice dump there on applied materials. That's a pretty good hit there. Oh, NVIDIA paid dividend yesterday? Okay. Chris, the forum's for members, so it's on the website at carnivoretrades.com. Appreciate that, Max Vaughn. And Jojo, thank you. Yeah, I mean, that's the same thing, Trev. So, like, I like the fundamentals, but sometimes Wall Street just looks at things and they don't look at the next decade. They look at the next 6 months, especially when you have the futures market in play. And this is spot price, so for January. So some things come into play that you don't always expect. So that's the way I look at it. I never want to be arrogant enough to think that I can't be wrong. So that's just the way I look at it. Elon buying puts, yeah. Somehow he could do that and get away with it too. The SEC can't do anything to him. Let's look at Met Call here. This is holding up really well. It's a little bit of a not newer issue. It goes back to 2018. Yeah, this is a good chart. I like this. I don't know if I would buy it for a swing trade, but it's holding up really well. So you have, I mean, here's the beginning of the year, and you're up, what, 30% year to date going into the end of the year versus, the S&P, which is down 25%. So this is a good chart here. I can't really say anything bad about it. I just don't know if I'd long it. I don't know much about the company, but it's holding up really well, and I know coal's hanging in there. I do have a little bit of a trend line, perhaps. Something like that. And you have higher lows, so it's ascending. This could be a good play. I still think energy in general needs to correct a little bit more, like the XLE names. I know this isn't a pure, like, it's not like an Exxon play, but I still think it does need to correct a little bit more, but I do like energy moving forward. Let's look at Peabody. I looked at this a few months ago. Yeah, Peabody holding up really well. I do remember, I can't remember who I brought it up to, but I like this inside bar here. So big green bar on the monthly, inside pattern, and nice push higher. So this is holding up well, and it's looking to push through this whole area. That's why you have to consolidate there. So Peabody holding up well in addition. So yeah, coal, coal's a good trade right now. It's not overbought. It's not extended. It's not anything wrong. And it's outperforming the market. We can't really say anything bad about it. Right, exactly, Maximilian. Like, that's the thing. Is yes, supply is something you can't fix, but you're right. Like, if factories close, if businesses close, how much damage is done. And we don't even know how much damage is done yet, because we've only felt the effects of the first one or two 75 basis point hikes. And I don't think everybody realizes, because it's probably just so normalized at this point, but this is like historic, like an unprecedented, aggressively rate hiking that's going on. And it takes, 6 to 12 months for it to even like set in. So we don't even know how much damage has been done, especially with those yield curves that, the 2s and 10s have been inverted for the better part of the last year. So, I'm sure that's nothing though, right? But yeah, that's your case against, nat gas right there, or even crude. So, let's get INSG. This could be, so my first thought here, I think I remember playing this at one point. I don't remember when. But this could be also a January effect play potentially. This thing's really beaten down though. I don't see anything good with this chart. The only thing I would say, and also here's the other thing that I won't play this because it's 84 cents and it only trades 100,000 shares a day. So that means like the smallest hedge fund could like move this 10% in one day with no problem. So I would avoid this, but I mean, yeah, it could be a January effect play. It could get a bid, but this chart is pretty bad. Yeah, I could probably do that sometime, Jerry. I'll write that down. I'll show you guys my setup sometime. I can do that. IMXI. Not sure about this name. Yeah, see, this is another one that's thin. I don't like these thin names. You got a pretty good weekly bear flag there too, but the trend is up. Let's go GSO. So again, down move. What kind of pattern is this? So you got kind of a bear wedge here on this one. I'd be careful with this name too. TLT here. So I still have a buy. I still have a buy signal on the yield. And for what it's worth right now, just looking at ZB, this is a 4-hour bearish inside bar. And same thing on the hourly. So this is probably setting up to go test that white trend line right there. Maybe even the 50 moving average. After that, yeah, I think TLT can be a play going in Q1 though, for sure. But yeah, it's got to do some backing and filling. But yeah, I do think it probably gets going a little bit into Q1 for sure. Yeah, Cleveland Cliffs, that's the other one. Yeah, Cleveland, nice pop there. That's a nice move there for CLF, and you closed above these pivots. I like that. You got higher lows there. This is a chart that's been kind of beaten down. Now it's got a wall of resistance at 18. Just be aware of that. But that's showing relative strength in a down market. But it's got a wall right up here at 18. Just be careful. But this is that's a nice move though. You could even make a case. I mean, it's a little sloppy, but you could make a case you got a little inverse there, inverse head and shoulder. I'm not in love with that right shoulder, but yeah, that's a pretty decent chart, believe it or not. So it looks like maybe the lows are in on this one. We'll have to watch that in the next couple of weeks. It's got a wall at 18 though. If you consolidate at 18, put in higher lows, this can go higher. But yeah, that's a nice chart though. Let's just check on the futures here before we close. Yeah, so they're hanging in there okay. Amazon, I kind of like Amazon for a bounce too. I also like this for a January effect type play. I'm just not sure how much upside it has in it. But you could also make a case that, kind of like Tesla, it's almost got that kind of falling wedge look. It's kind of like right there. You could even say it is a bigger one down here too, potentially. Really big one there. The only thing is, it's a little bit. I would prefer it. I prefer it like a little closer to 80, but you know, this definitely could be a January effect play. I don't want to see it close below this 85, 87 though on a weekly basis. So that would be tomorrow. That'd be a pretty good sign of weakness, but it could still get a bounce regardless, um, just because of that tax loss selling. Retail like Target and Walmart. You mean Target's? Man, that thing's been really beaten down too. That's close to double bottom. This is probably going to get a bounce. See, this could also be a January effect play as well. This has been in that area, this area here for a while. Now this is still weekly bearish consolidation. Let's not make any bones about it. But for a short-term trade, you could probably trade that off of the double bottom there. But that's an ugly monthly too. Oh, Amazon. I wouldn't even worry. I didn't even care about that, honestly. I'm just going off of the charts. Macro picture, as far as actual fundamentals, yeah, these things all got lower to go. But at least for the next, 4 or 5, 6 weeks, maybe they can hold up and get a bounce. I do a lot of buying on Amazon though, so maybe I'll offset it. Let's look at SWN, Southwest Energy. This is good for iron condors. But let's see. I mean, I don't know much about the company. Yeah, this is another one of those, man, just never recovered from that last decade sell-off. But it's holding up now. I mean, it's at least got higher lows here. I can say that for it. It got through this level. I'm assuming you probably asked me about this like a year ago. You or somebody else asked me about this a year ago because this white trend line is on my chart here and I don't remember putting that on here. But yeah, there you go. There's your breakout area. It's testing that again. Yes, if TNX makes higher high, yeah, yeah, we're gonna have real problems. But, and it could be. Um, the Fed says they want rates to go to 5%. I don't know. I don't know about that, but I think and this is the one thing I said a week or so ago after the last FOMC, was like Jerome Powell. I think I might have said it in the live stream last week. I was like, Jay Powell will be the last one to figure out that they've overdone it. And you can clearly see based on the economic data that inflation's coming in. And so they're like, you know, they're still looking to raise rate. They're still, we're going to go to 5%. It's like, you guys realize that you're already at the terminal rate, right? Like you don't need to do any more. At least that's what I see here. But yeah, could get problematic. Let's look at, I'll look at VNOM here for RJ. Viper Energy. Yeah, again, I mean, these energy names are all holding up. It's actually a pretty good chart. It's a strong chart. You backed off of this area here in a double top. It's putting in higher lows. Yeah, this one probably wants to get through. Yeah, this probably wants to go up to the highs. I don't know if I would have an entry for it. I mean, you could buy it and just hold. It might want to do more backing and filling, but this is a good chart. I like the higher lows here, the double top, higher lows. That's a good pattern there. Maybe it wants to go down and fill that gap, maybe even down to 28. Kind of reminds me of just like the XOP chart. So right in there. So that could be a good one. SILJ, yeah, this should get to 12. Yeah, it'll get to 12. That's ultimately where it wants to go here. It's still holding up. I just don't want to buy it right now because silver is like in runaway mode, and it's just too, it's silver's too overbought for me to really get excited about. You also have like, pretty good kind of trend line resistance you're coming into here. And it's overbought already. I think it just needs to correct. So that's why I haven't jumped on any silver plays. We did exit that one a week or two ago, made some nice money on it. But this needs to correct. Like 22, maybe even back to the 50 moving average somewhere. Yeah, sure. But I wouldn't touch it until then. Just it's because SILJ could, go back to 950 for all I know, if that happens. But it's holding up well. I wouldn't fault you if you wanted to take a stab at it here. Just be aware that it might have to do backing and filling. So I wouldn't go all in on a position. But yeah, I like the chart. It should get to 12 bucks. And we'll be playing it. We'll be playing it eventually. Yeah, JD, the only thing with the Chinese ADRs is I stopped trading them like earlier this year. I probably like March, just because the Chinese government changes their mind on a weekly basis. And I mean, look at the volatility in this. Look at BABA. It's down like 40%, then it's up 20% in a day, then it's down, then it's back up, then it's down. I don't want to wake up as a swing trader and find out that my position is down 20% because some bureaucrat said something overnight. So that's why I stopped trading. I'll day trade them if I see a good level, but I can't really, even Baidu. I like Baidu, but I don't know what they're going to say overnight. So Pinduoduo, this one's holding up really well, but it's just too much of a wild card. I have no control over it, So that's the way I look at it. Let's look at plug power. Yeah, it's getting hit pretty hard. Let's see, yeah. NFSLR is holding up really well. Let's go to a weekly. Yeah, so you're into kind of a double bottom, but you've already hit it once. Maybe you give it a shot at 10 bucks. There's some, this is where you broke out from previously. Right in there, that's where I would say you take a stab at it. Yeah, this one's been, was that $30, what, like 3 months ago? Man, what a sell. You bought Target, Nicole? Yeah, I don't have a problem with it down here, honestly. I mean, I could easily get back to, 150, 160 in the next couple of weeks. Well, big picture, I'm not in love with it though. And you guys got like all sorts of energy stocks to throw at me here, don't you? Yeah, it's another one. Wedge. Let me guess. It has all-time highs, like 10 times where it's at right now. Yeah, pretty much. Going back to 2015, yeah. Yeah, so you went into this area here. Buyers become sellers, but it's got a nice wedge on the weekly. So, let's just go right here. So it could be coiling up for a push. Not terrible. ENPH. Kevin, everybody wants me to tell them to short ENPH. It's just not extended. If it was parabolic, I'd say go for it, but it's just not. I mean, yeah, you got parabolic here, but I don't know. It's not overbought enough. Like right here, yeah, I would say yes, but it's It's done too much backing and filling. The premiums are ridiculously high. Yeah, they are ridiculously high. Appreciate you, Chris. All right, LPG. All right, I'm gonna look at a couple more, and then yeah, that's strong too, Dorian. But I'll look at a couple more, and then we'll sign off here. See, this is borderline parabolic, though. That's the only thing. So this one is kind of parabolic here. The only problem is it's yeah. I still think this can go higher though, because you're at an all-time high, so it's hard to say where it would. Um, I have nothing else to trade it against, you know, as it's only been around for 6-7 years. But yeah, it's holding up really well. But there's also a huge air pocket in here, so if you ever lost this pivot low, you'd probably go right back down to 15. Just be aware of that. It's snowing, and you see it. It's raining here. It's going to snow in the morning probably, and then we're going to have ice everywhere. So, yeah, it just stopped raining. All right, cool. All right, guys, I'm going to wrap it up here. Yeah, thanks for everybody coming out. Yeah, wild day. Market at least keeping us entertained. We were in this stupid range for a long time, so nice to see some volatility. We'll see what we get tomorrow. I think the bulls have a little bit of momentum here. You got to think coming off the lows there. They did pound it pretty hard into the close. But we'll see. I mean, this is still a bear market. Got to be on your toes. Don't take anything for granted here because it is, you know, it's a treacherous environment here. And December is always a tough month to trade. Definitely also keep an eye on the transports tomorrow. I'll be covering it, obviously, but that weekly level will be a major pivot point going into next week and next year. So anyways, guys, I'm going to wrap it up here. You guys take care. I'll talk to you guys.